Hi, Brendan here with another episode of Coach Gee TV. Last night I'm watching TV and an advertisement comes on for Scottrade. And Scottrade is advertising $7 trades are just the start. So they're trying to lure you into buying stocks. And if you take a look at it here, there you see, $7 trades are just the start. And if you come back to me, what they're listing is for $7 you're going to get a whole bunch of services for free just by trading and using their services and only paying $7 per trade. Well, here's the thing. They're not being truthful with you in terms of all the expenses you're going to pay in buying and selling stocks. And I thought I would help you to better understand what those costs are. If you come over here, what are all the costs an investor pays when they're trading stocks? Well, everybody's familiar with commissions. That's the fee to the brokerage house to execute the trade. In Scottrade situation, it's $7. You've got what's known as the bid-ask spread, and the bid-ask spread is a markup when you go to buy a stock, and it's a markdown when you go to sell it. There's the market impact cost, and what that means is this. Let's say, for the sake of argument, you want to buy a stock and the supply is down. Market prices are affected by supply and demand. If the supply is down, you're going to pay a little bit more to buy that stock. Let's say the supply is up and you want to go sell that stock that you own. Well, you're not going to get quite as much when you sell that stock. There's delays. There's a delay expense. This is if you wait for a stock to hit a certain price and it doesn't get there, it actually goes up. So you absorb that cost. And then there's mistrade. So these are all the costs that go into trading. These are all the costs that are absorbed by the investor. It's a lot more than just 7%, or $7, excuse me. And this is the iceberg effect, if you will. There are costs that are above water, so to speak, that you can see a little bit easier. Commissions, bid-ask spread, market impact, delay, mistrades, etc. On top of, in addition to the $7 per trade, the investor is absorbing another 1.15% in trading costs. This is if you're trading large company stocks. Well, it gets a little bit more ominous when you go to small company stocks. Again, you've got commissions, bid-ask spread, market impact, delay, mistrades, and all that. And rather than 1.15%, there's another 11.71% that the investor absorbs in costs. Scottrade isn't mentioning any of these. And if you'll come back to me for a second, the question is, how could an outfit like Scottrade or E-Trade or anybody else afford to put their commercials on the Super Bowl, or on golf tournaments and so forth like that, if they're just making $7 a trade? And here the truth is this: they couldn't. There's a lot more wrapped up in the expenses and the profitability of Scottrade when an investor trades a stock. Scottrade isn't going to tell you this. Hopefully you've learned something here today. Bye.